In today's video, we are doing a detailed short-term and macro analysis for Bitcoin, discussing absolutely everything you need to know about what is happening with the price action, how to plan and prepare for what happens next, and of course the key levels and targets you should be paying attention to. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're taking a look at Bitcoin on the macro and the short-term charts, discussing what is happening, what is likely to occur next, and the key levels you should be paying attention to. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us with nearly 700 members in the VIP channel. We have been doing the VIP channel for 38 months now. Absolutely insane. We post exact entry prices, targets, and stop losses for all of our trade setups with exclusive analysis. Again, you can find out more information about the VIP channel in the pinned comment of the free channel. We do have a sale at the moment with up to 30% off your memberships with only 20 spots available. Again, if you want more information, click the membership information link or view our trading track record where you can see 38 months of data, 1,021 taken trades for 81.39% win rate. Again, you'll be hard pressed to find any channel out there that goes into the level of detail we provide with our trading setups considering our accuracy and win rate. Go ahead and check it out. Let's dive into a video, guys. So starting on that market data, 24-hour volume is down 14.83%, sitting at 133 billion. 24-hour liquidations are down 28%, sitting at 112 million. Of the 112 million in liquidations, 80 million have come from long positions and 31 million have come from short positions. So initially it tells us we have seen some downward price action over the last 24 hours. Taking a brief look at the price action over the last 24 hours, we can see ever since we came up and retested that major point of resistance at 70,700, we saw a downward trend develop, and we've been in that downtrend now over the course of about 3.5 days. We are now retesting a major liquidity zone as represented by this green box, as well as a confluence point of the weekly uptrending support, moving into our POC level and our major $67,000 support region. So we're discussing exactly what is happening here and what you should be expecting next and the key levels when we get into our short-term analysis today. However, just a brief summary of the last 24 hours, we have seen the price action slowly steep and dip their toes underneath that weekly uptrend. Moving over to the broader markets, the DXY has seen a pretty nice jump up here. Again, we can see we've bounced from that yearly uptrend over here. This is the yearly uptrend extending from December 2023. We have bounced from that region, now breaking back above its head over that yearly level of resistance. Again, guys, while we move up in this region over here, we are looking a little bit cautious for these risk assets. Again, if we do break over this high, this is when the DXY is really going to move in this aggressive upward move up into this 108 region. If we do break down from this trend line, that is when we expect again a large correction in DXY to 103, and that is when we should see the risk assets including Bitcoin and stocks really shoot back upwards. Taking a look at our RSI over here, we can see again, like we've been saying over the last few weeks, we do not have any leading data suggesting we are going to be breaking down from this trend line as of right now. The momentum is positive and the price action is respecting this trend line, printing again higher lows. So again, we do have a very clear uptrend. What is most important is going to be the upcoming economic data. Of course, the very important ones we are paying attention to is going to be on the 7th of June. We have got NFP and unemployment data. On the 12th of June, we've got our inflation data. And then moving over to the 13th of June, we've got our interest rate decision. Now, that is going to be the big one, as that is going to determine the actual risk change in the market. If we see massive shifts, or even if we see again in the Federal Reserve meeting, the press conference after the interest rate decision, they show more hawkishness or dovishness, or they show, they're willing to move towards a earlier rate cut, or they're more skeptical on early rate cuts, this could massively influence the perceived systematic risk in the market, basically the perception of risk at a future date based on leading data. Okay, that's what it is, which could influence investors' decisions on the short term, which could result in some large volatility or even directional moves on the weekly and monthly for the risk asset market. So we're very much paying attention to this here. I would assume the next 13 or so days of price action is actually going to be a little bit choppy and a little bit speculative as we move into these interest rate decisions. Let's go ahead and move over to the broader markets again, going ahead and taking a look at the S&P 500. We can see S&P 500 and Dow Jones. The S&P 500 is holding up a little bit better than the Dow Jones as we just briefly saw. Again, we are moving between our highs and lows over here. Our higher low level right over here is also going to be a bearish trigger, and our high is going to be a bullish trigger. A weekly break above this level will result in a directional continuation upwards, whereas a weekly break below our higher low will officially put it into a high time frame downtrend, resulting in a continuation to our 2021 high points. Directional moves between our high and our low should be considered high time frame volatility, and again, high time frame swings between our high and low supports. Again, any directional moves that occurs between our trigger points is expected to be normal and rational movements and fluctuations of the market. It's only when these high time frame levels of liquidity actually end up breaking do we see directional shifts in the trend of the price action. Moving over to the Dow Jones, not looking as good here as the S&P 500. Again, pretty harsh rejection over the last 2 weeks, almost bringing us back down to this 37 to 38k support region. Again, a loss of our 37.7k region will result in a high time frame downtrend to our 2021 high point. This would be the first sign of actual real weakness we would have seen on the Dow Jones since we broke that prior uptrend all the way in September 2023. So again, we are still showing strength provided we remain above 38k. With that being said, let's go ahead and jump into Bitcoin now. A quick word from our video sponsor today and we'll jump in. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay, MegaWhale team, let's go ahead and jump into it. So with the developing price action in the traditional markets looking more and more weak, a big question is on Bitcoin. Well, how is Bitcoin looking? Are we looking weak? Are we looking strong? Is the macro chart showing signs of exhaustion, or in fact the macro chart still very much bullish? How are the short-term charts developing, and what is expected next for Bitcoin? These are questions we're going to be answering in today's video, not only showing you, but providing real data based on historical patterns and current price patterns to go ahead and justify our explanation. So let's go ahead and jump into it, guys. As we can see, Bitcoin has been in a downtrend for quite some time over here, just the last 3 days. If we zoom out, we've been in a weekly uptrend for the last 2 and a bit weeks. This is our weekly uptrend spanning from mid-May 2024 and expanding. We've retested this point once, we've retested this point twice, establishing the trend, and we've now deviated underneath this region. But this deviation under this region is not too much of a big concern, because what really does matter with this weekly level is that we remain above it on the daily candle. So as we can see over here, we did actually manage to close a daily candle above this level. It doesn't really scale out very, very well on the daily chart. But if we do zoom into that 4 hourly and even that hourly, we can see that prior hourly candle over here closed just above it. So we can see a trend line right over here. We close literally just above it on that daily candle, basically on the exact dollar of that trend line. So the current weekly trend is technically respected and is still intact. It is only if we close that daily candle under the trend line would we see a loss of this weekly trend. Remember, when we look for weekly trend losses, we look for daily close. When we look for monthly, we look for weekly. We go one down, we do a step down generally when we're looking for these breakout validations. So what have we actually seen here? We've seen a downward movement, And what we're seeing on the RSI is we're showing some degree of strength. A very, very weak bullish divergence has been developing here, again, with rising RSI, very, very slightly rising. I know my line there was horrid, but it's very, very slightly rising RSI with a downtrend in the price action. So we do have a slight bullish divergence developing here on the RSI. If we take a look at the price action from a structural perspective, what we can see here is we do have a falling wedge pattern. This is simply where we have two diagonal trend lines and the price action is converging, nearing the end of the structure, nearing that apex point. This is an indication of price action, again, a visible representation of what buyers and sellers are doing over a period of time. So when we look at price structures, we need to eliminate ourselves from just looking at the shape. It's more or less, what is the shape? What is the structure? How is the price action moving? And what does that mean about the shifting buying and selling strength over a period of time? Because that is what it's really representative of. What it is representative of is we still do have this overall downtrend, but selling pressure is starting to weaken over a period of time. And that is why we have this compression in price action, and we can see that the RSI is rising ever so slightly, indicating that the buyers are slowly starting to step back in at this point of the weekly uptrend and our liquidity zone, which is a potential reversal developing. So what are we seeing here? We're seeing a possibility for a reversal to develop. Has that reversal developed yet? No, it hasn't. Are we bullish on the short term yet? No, we're not. But we have the possibility to do so. So at what point do we see a reversal develop from our point of confluence? This is our liquidity zone and our weekly uptrend. So what we look for again for reversals, for price structural breakouts, for any sort of breakout, my personal rule, again, these are rules I created myself over 8 years of trading. These are all rules, everything I teach you, these are things I personally have created. I look for 3 points of validation: trend, structure, and strength. If I have all 3 of those things, I have a high confidence break. If I have 2 of the 3, I have a low confidence break. And if I have 1 of the 3, I would assume it to be a fake out. So what I look for, we look for trend. Have we broken out of the downtrend? The downtrend is represented by this diagonal trend line. The answer is no, we haven't. We are still under the trend, so we do not have a breakout on the trend. Structure. What structure are we in? We are in a falling wedge structure. This is a bullish structure. Have we broken out of our structure? No, we haven't, but it is bullish, so it's a good thing, but still no point to that one. And thirdly, strength. We use the RSI. Again, we validate the RSI highs with the price point highs to ensure we have a valid downtrend on our momentum. Have we broken out on the RSI, which would signify strength? No, we have not, and therefore we do not have a strength tick. So out of the 3, structure, trend, strength, we have 0 out of 3 yet, which is perfectly fine because it is not suggestive of a breakout, and we can see the price action has not done so. But what this is good is if we do see the RSI breakout and we do get that trend breakout, that would flip to 3 out of 3 validations, and we would have a valid and confirmed breakout of the descending channel, or should I say a falling wedge. So where would we expect the price action to go? Taking a measured move from point 1 to point 2. Again, point 1 is the high, point 2 is the low. Applying it to the perceived breakout point, we can see that measured move should take us back over that prior high point at 70,700, which is likely going to push us into the range high. So a directional breakout of this falling wedge would have the capacity to facilitate a directional continuation to retest the range high of the monthly 2-month-long horizontal consolidation range, which would retest that buy side liquidity. So this is a very, very important level for Bitcoin to remain above, as if we invalidate this structure, we are likely to see a correction. So the bullish case scenario, we break out, we validate, we continue upwards. Again, these are all trigger points: 68,600 short-term resistance, okay, 69,600 short-term resistance, 70,700 short-term resistance, and our next target is going to be at the buy side liquidity at around $72,000. So all of these lines here are actual targets for the breakout. Take profit, take profit, take profit, take profit. As we reach these levels, you should be adjusting your risk, managing your stop losses, etc., etc. So the bulls are not fully in control here on the short term. On the weekly, they are. We did remain a daily candle close of the weekly trend. Bulls in control on the weekly. On the short term, we're regaining control after about a 3-day downward movement. Overall, looking pretty good, looking pretty good. So let's talk about the bearish case scenario. Say we invalidate this stuff. Say we drop below falling wedge is a fail, and again, we can drop back down to this range, provided this downtrend remains. We're good, right? We can see something like that. There's a very possible scenario. But for the bears to really take control over here, we would need to see a loss of the POC, okay, which is going to be that level at 66.8, as well as the 67,000 major support level. So we'll go ahead and slightly zoom out a little bit to the 4-hour chart. We can see over here that that liquidity zone spans a fair bit over here. This liquidity zone, it spans a fair bit. This green box, it does span from, again, like we said already, where we are currently retesting, which is the low of the short-term liquidity zone, all the way down to our sell-side liquidity, which is a reversal point at 69.6. Again, the lower range, okay, 66.9, sorry. The lower range of the midline of the high time frame horizontal channel. The midline of the high time frame horizontal channel is going to be, again, the exact center point between the range high and the range low of the monthly 2-month-long consolidation. So only a loss under the sell side liquidity would put the bears back in control for a directional continuation downwards to 64.5. As a consequence, a loss of the 67,000 support and a trigger of that bearish trigger for a move toward the range low, which we're looking for an initial target at 64.5. So a very important level we're testing here, because this is going to be a directional trigger point for the next few weeks of price action and potential whether or not we go back into a high time frame downtrend, which could take us down to our range low, or whether or not we see that directional continuation upwards. So watch those levels, very important stuff. Let's go ahead now and zoom out again, deleting all these little points just to make everything a little easier to look at. And let's talk about the high time frame influence. So if we zoom out here now, guys, we can see Bitcoin is very much in a high time frame consolidation. Once more, we've said it many times, while we remain above the 67,000 region, it's red box, you can see we are going to be at support. And support is support until it is not. Until we have indication, leading data that support will fail, we have to trust support will support. And therefore, we are looking for that directional continuation upwards, which is going to go ahead and add confidence to what we have seen on the short term, which is the bearish exhaustion as per the falling wedge, okay? And the bullish divergence as per the buyers starting to slowly step back in at a key level of confluence with the weekly uptrend in the 67K region. So we are expecting directional continuations upwards. Again, if we lose this region, that is when we expect a retest. Okay, if we look over here, we have a high, we have a lower high, we have a lower high, we have a lower high, and this lower high was broken. So we look for a retest of that higher low, what was once broken, as a region as support for either a continuation or a directional correction downwards. That is it on the high time frame. If we zoom out even further from here and look at the high time frame context, for a high time frame move into a macro continuation, and imagine above 73.8 is the parabolic phase of Bitcoin, right? This is price discovery. This is explosive price action, parabolic phase, whatever you want to call it. Above 73.8 is parabolic phase. For us to trigger, okay, above the deviation, break into macro continuation region into the parabolic phase and price discovery, we need to break above the buy side liquidity. Again, if you remember, the short-term target for the falling wedge was up to the buy side liquidity. So we do not have any confluence besides speculation right now that would validate a break above that level. That would have to develop as the price action develops. We have no data right now that is telling us we're going to 100% break the level if retested. We do have data to say that if we do retest it, we're retesting it from a position of strength, which is increasing the likelihood of a breakout. But all we can say now is if we get those short-term validations, we could expect a high retest of that region, and we have to play it by ear when that level is retested. So that is it for the short-term charts, guys. Let's go ahead and jump over to the macro chart. So the weekly chart is still looking decent. Again, really simple. You want to keep it as simple as possible. Don't overcomplicate it. The weekly chart is looking fantastic, provided 60K holds. Okay? Provided 60K holds. And why is my chart? Sorry, my chart's a little bit glitched over here. Let's go ahead and go over to the weekly again and update this chart so it's all accurate again. Here we go. Okay, weekly chart. Provided the 60K region holds, we're good. We're good. This is the pi cycle high over here. Okay, this prior high, pi cycle high, deviation into pi cycle high, breakdown, bearish engulfing candle, triggered high time frame downtrend in capitulation and lows, breakout of bear market as per this dotted trend line over here, into bull market uptrend for the last 7 months, entering a high point. Again, we have our buy side liquidity, which is our trigger point for a macro continuation high, and we have got our pi cycle low, which is the 60K region. price cycle high, 60k region, which is acting as a support resistance flip and high time frame trigger point for a directional continuation downwards if broken. Therefore, only if we break a weekly candle below 60k do the charts really start to look bad. Until then, we can see any sort of price action, provided we remain above 60k on the weekly chart. The strength is there, the support resistance flip is there. We are looking for directional continuations above. So we want to keep it really simple. We want to look at one thing and one thing only. Just look at a 60k region on the weekly. Look at that level and make sure we do not break below it. Total crypto market cap, exactly the same thing. The level is going to be the 2.2 trillion to 2.13 trillion. Provided this area holds, directional continuations upwards are expected. Bitcoin dominance breaking down from this trend, looking fantastic. Again, only if we see a break above this resistance will we expect Bitcoin dominance to increase. This could potentially be back into a high time frame downtrend again. If we do see Bitcoin dominance increase from here, we are very likely to enter a high time frame downtrend for the entire cryptocurrency market. And again, provided we remain under this trend line and under this high time frame resistance, which was once bear market support, we are expecting an altcoin season to eventually heat up. If we look at the macro charts, guys, really briefly going through it, the macro charts are still looking strong. And if there was one thing I really want to point out to you that has predicted, again, the start of high time frame downtrends historically, that is simply going to be, okay, a breakdown of the high short moving average, okay, the yellow line on the weekly chart, okay, on the weekly chart after the lower band has broken into the Ichimoku cloud onwards. So we look at every single time historically, from the point at which the lower band of the price cycle indicator breaks into the Ichimoku cloud onwards, it is only when the price action breaks the weekly candle underneath that yellow line do we see the price cycle high print, we see the vortex trend indicator retest the downtrend on the vortex trend, and we see a high time frame downtrend originate around 30 to 40% historically. So again, we can look at the prior cycle, we'll see again from the point at which we break into the Ichimoku cloud onwards, we remain above the price cycle high short moving average, okay? And only when we break below it do we enter a high time frame downtrend. That always occurs after the price cycle high and the retest of the vortex trend. So if we were to see a breakdown of that level prior to a retest of the vortex trend indicator, and prior to a print of a price cycle high, we could see an early top for Bitcoin. Until that happens, and until Bitcoin remains over 60,000, until we see the total crypto market break down, any short-term movements should be considered healthy price fluctuations. I can't stress it enough. I cannot stress it enough, guys. We have to trust the charts. You can't just throw speculation, oh, we're going to 30K, oh, we're going to 20K, oh, we're going to 40K, with no substance. There is more data to suggest we're going up than there is going down. Remember, there is always data out there to support any claim. And that is why you can always make an argument we're going down, and you can always make an argument we're going up, because the market, there is nothing for certain. There's always different perspectives. But it is important that you don't latch onto one perspective. Instead, you review the plethora of information out there, and you ask yourself, after reviewing all of the information, what different perspectives have more data supporting them? What perspectives have the majority of the evidence to support those claims? And then you position yourself with not only with the majority of evidence, but with the evidence that hold a greater degree of significance in regards to future potential price impacts or future systematic risk. Thanks for watching. See you guys tomorrow. Have a great day. Bye.